Hi there, this is an instructional video showing you how to use the 2-year projection spreadsheet. Note that a lot of these tips can also be used in a spreadsheet that you export from QuickBooks Online or QuickBooks Desktop per the instructions that we provided in this module. But for the purposes of this explanation, we are going to use this 2-year projection spreadsheet. First thing we want to look at is tuition. So we're going to go to our revenue tab here. Now this revenue tab can be used in other areas. All you have to do is copy this revenue tab into whatever spreadsheet that you are wanting to use, and then make sure to copy the total revenue, and I'll kind of give you a little bit more detail on that in just a second. In column A, we have our total age groups and we have the number of days they attend. Note that you are able to write over these with something that is similar to your own center. You may not have infants, you may not have pre-K. Feel free to put in your age groups and your billing segments. And then here we have the rate, and again, you'll want to update the rates for the actual amount that you charge per month for a student. If you are doing weekly charges, you'll want to multiply your weekly charge by 52 weeks and then divide it by 12 months in order to get your monthly amount, because we are forecasting on a monthly basis. And then in columns D through AA, that is where we're going to enter the total number of students that we expect to have enrolled per month. So let's say that we expect 20 infants to be enrolled, and on the first month of our forecast, $33,340 in tuition per month for those infants. Now let's say we expect to enroll another 2 and we don't expect to lose any, and the next month we'll enroll another 2 and then we'll enroll another 2, but it turns out 26 is the maximum number of infants that we can have, so we'll just go ahead and use 26 for the rest of the time. This is not necessarily how you need to do it. You need to actually forecast based off of what you believe will be the case. If you use a software such as Kangaroo Time, I know that it does a forecast of how much we expect, and you can use that forecast to see where you think you're going to land. I think there might be similar things in ProCare or Brightwheel where you can take a look at how many students you had, and also just looking at the trends of how many students. You know, here in month 8 in, let's say that's June, maybe we expect to disenroll a bunch because that's historically what's happened. So we'll want to take that into account. So this is, I can't tell you exactly how many students you're going to have. It's something that you'll have to work on and figure out what is the best method for you to be able to figure out how many students you expect. All right, so let's say we expect another 10 toddlers, and let's just say we're already maxed out there. That's the most that we can have. So we'll go ahead and use that. And then for preschool, let's say that we currently have 20, but we expect, in, let's just say month 3, we expect that to go up to 30, and then we will stay there for the rest of this period. Again, this is just totally based on what's really you really expect that's going to happen at your center as far as enrollment is concerned. And so now you can see we have our revenue for these age groups, and it is a total revenue of $76,236. So that number is then connected to the worksheet for the entire forecast here. So you can see this is going to be the revenue for month 1, the revenue for month 2, and you can see how that's working. So like I said, you can copy this revenue worksheet and put it into another spreadsheet group that you are using. If you did export your forecast from QuickBooks Online, and then just make sure that um, put equals and then go back to the total revenue amount and make sure that that all lines up and that it's coming through correctly in your spreadsheet for what your expected tuition should be. Okay, so now when we're looking at expenses, we need to go back to what we talked about earlier in this e-course, which is variable cost versus fixed cost. If we have a fixed cost, then that means we pretty much know what that should be month over month. So for example, rent expense, we have a lease, we would expect that our rent is going to be $10,000 a month. And we're going to go ahead and say, okay, great, it's $10,000 a month. That's, oops, did not work how I wanted that to. And that all works out really great. Or we could say, in 6 months, that rent is going to step up to 12,000. So we need to forecast for that increase, and we'll just add that in. Very straightforward. On the other hand, payroll wages is a variable cost. So obviously, the more students you enroll, the more people you have to have in the center in order to stay within ratio. So when it comes to forecasting these variable costs, they're typically going to be a percentage of something. So for example, wages, because it is primarily driven by the amount of students we have enrolled, it's going to be a percentage of revenue. And so let's just say that our payroll, we want that to come in at about 50% of revenue. So we'll go ahead and, take the revenue, multiply it by 50%, and that's what we'll get. And so as the revenue increases, we can see that the wages increase. On the other hand, payroll taxes, they are variable as well, but they're driven based off of the amount of payroll. So you pay payroll taxes on 7.65% of the wages you pay plus the unemployment tax. So usually I will forecast my payroll taxes at whatever the payroll wages are multiplied by a 0.0865. So that's the 7.65 for Social Security and Medicare plus about 1% for unemployment. And we'll go ahead and carry that across there. So similar for food expense, typically that is driven by the number of students that we have, so it would be driven by revenue. The average food expense for a center is about 4%, but obviously you need to make sure like how you spend. So even though the average is 4%, you may do organic or higher end food, and so maybe it's 8%. And so in that case, we'd want to take tuition, multiply that by 8%, and carry that across. So again, it changes with the amount of tuition that we expect to see. So for the rest of these, we just go line by line and look at how we're typically spending, what we expect to spend. Do we have interest expense? Do we have, how much do we expect to spend on curriculum? How much do we expect to spend on continuing education, legal and professional, and just adding all of those expenses in. And here you will see that we get down to the net of our income. So our revenue less our expenses. So for this month, if all things stay as we have it in our forecast, we would expect our profitability to be about $18,722. You can see that comes across all the way with a total at the end for those 2 years. Thank you.